QuickBooks Pro Plus Desktop 2022 OneNote presentation, inventory tracking options. Let's get into it with Intuit's QuickBooks Pro Plus Desktop 2022. If you have access to OneNote, would like to follow along, icon left-hand side, topic introductions, 6280 inventory tracking options. Also take a look at the immersive reader tool, topic introductions in the text area too. Same name, same number, but with transcripts. Transcripts that can be translated into multiple languages, either listened to or read in them. Same name and number as presentations as well. Topic introductions designed to give an introduction to the topic, provide screenshots, links where applicable, accounting background to complement the presentations, and can be used to follow along with the presentations if you don't have access to the software at that time. Closing the icon on the left-hand side, inventory tracking options. Shortly, we will be going into entering the inventory items. Before we do, however, you want to get an idea of what your inventory tracking needs will be. One, do you have inventory? Do you have inventory tracking needs, therefore? And two, if you do, how complex are those needs? And do you want to be doing the inventory tracking within the QuickBooks system, or do you want some other system to be setting it up? So if you have inventory, that usually forces us to deviate from a straight cash basis system. Even if you want a cash based system, usually the inventory is going to be an issue where you're going to have to track it if it's a non-cash item, if you have significant levels of inventory, which leads us to your first option. You might say that I don't want to deviate from a cash basis and my inventory levels are so low because I just buy the inventory and sell it possibly in a custom project or something like that. In that case, you might be able to get away with just basically expensing the inventory when you purchase it in the form of cost of goods sold, when you buy it with a bill or write a check. And then when you create the items for the invoices, then they're not going to be recording the cost of goods sold and inventory at that point in time. It'll be kind of like a service item. That's your first option, the most simplified option. But if your inventory levels are significant at all, you will have to put them on the books as an asset and then record the removal of that asset as you sell the inventory somehow, either using a perpetual inventory system or a periodic inventory system. If you do the inventory tracking in QuickBooks, you're using a perpetual inventory system. QuickBooks Pro will generally use what's called a weighted average inventory flow assumption, those being weighted average versus first in, first out versus a last in, first out, or you could use specific identification if they were large pieces of inventory. The inventory option on the desktop Pro version is the weighted average. So you got that as the option. That's what we'll use in the practice problem. If you want to go to some other tracking option or have more advanced options for inventory, that's one reason to level up in the type of inventory or the type of QuickBooks software that you would be using to get more customized options within inventory. You could, however, use a periodic system of inventory tracking and say, I don't want to track it in QuickBooks on a perpetual basis because that becomes more complex, and possibly use, say, an Excel worksheet to track your inventory outside of the system and then basically enter adjusting entries into the system as you sell the inventory on a periodic basis at the end of the night, at the end of the week, or at the end of the month in that format. So you got a couple different inventory options. We, of course, will be turning inventory on to practice the tracking of inventory within the QuickBooks system. Quick look on what an Excel worksheet would look like with regards to inventory. This would be more of a perpetual inventory system where you have a beginning balance of inventory. These are the units of inventory that we have. If a purchase happened, we purchased 400 units at $55 for $22,000. If we add that, then over here, we have the original 100 units at $50. Now the new units of the same type of inventory now cost $55 because of increased cost, which is the general rule due to possibly inflation, gives us now the 22 for a total of 27,000 worth of the inventory. And then if we had a sale, then we have to determine how are we going to sell these items. This is currently using the FIFO method, whereas QuickBooks, I think, will be using the weighted average, but the flow assumption is not important right now. Just note that we're basically recording the cost of goods sold as we go, and I have to then determine which units and how to basically cost those units. In this case, I'm going to say 100 units at 50 and 320 at the 55. to sell 420 units that we're going to be selling. And then we have to determine how many units are left over at the end after we sold those 450 units to get to the ending inventory that has 80 units at 55. This is basically what the QuickBooks system will kind of track for you as you enter invoices. It will actually reduce the inventory as you make the sales or as you enter the sales receipts. You can also use a periodic system, which you might use outside of QuickBooks, because that perpetual system can get a little confusing to set up. We'll go through it here, but you can also say, hey, look, I'm just going to simplify my QuickBooks and track the inventory outside, count the inventory at the end of the time period, and then determine, based on a physical count, how much inventory was sold, how much the inventory should be decreased by, the other side then going to the cost of goods sold. So that's kind of your other option. When you have the inventory, as we enter the items, they will help us to populate the bills when we purchase the inventory. By having the items tab on this side, the items tab will allow us to track the inventory as we purchase it on a per unit basis with the subledgers, in addition to just the dollar amount. When we sell items, then the items here, like we saw with the service items, can now be populated with inventory items too, and the inventory items will drive a pretty significant and difficult journal entry, which we'll talk more about in the future, but involved with it will be the tracking of the inventory and the recording of the cost of goods sold on a perpetual inventory system if we use the inventory items and track it using that format.